Welcome back. You're watching News Centre. The Confederation of Indian Industries is holding a two-day conclave titled India Edge 2025 in New Delhi. The event saw industry leaders and policy makers deliberate on the opportunities and challenges for Indian companies and the economy at large. Timsi Jaipuriya and Shivani Bazar spoke to Rajiv Memani and Sanjeev Bajaj about the rupee breaching the 90 mark against the dollar and also their outlook for growth.
I think from an industry standpoint, Timsi, the view is that industry doesn't like volatilities. So as long as whatever market trends are and the rupee is behaving on that basis, I think that's fine. But if there is too much of volatility, I think then it starts impacting people. So I think right now people are just starting to see where it eventually settles, and then I think people will take a view on that.
When we talk of export competitiveness at this level of rupee, how do you see what is in stride of India, especially when it comes to the economic trends?
So I think overall the Indian economy has done well. You've seen the last quarter's GDP numbers. You see relative to what's happening in the world. I think the Indian economy has been doing very well, but we are also in a situation where the global economy is underperforming. Each country is having its own trade policy. So in that environment, to look at exports and also the India-US trade deal and the impact of that. So I think when we look at our exports, we have to look at it at that context. I think definitely from an export standpoint, rupee reaching 90 rupee will add to the either the export revenues or to the profitability of exporting companies. We should not forget that services is now 45% to 50% of our total export basket. And I think that definitely a large part of the services raw material cost is in rupee. So I think that definitely makes the services more competitive. And in some areas where the exports are very reliant on imports as well. So whether it is gems and jewelry or whether it's crude exports, there obviously the domestic value addition is not that high. Therefore, the impact is not that much. The import also rises in a similar vein. But overall, if you were to ask me, I think just looking at an isolated way that how does it impact exports, I think it does impact exports positively. And from a macroeconomic standpoint, the current account balance is not much of an issue right now in India. The interest rates are very benign. Inflation is very benign. So I don't think there's any macroeconomic risk because of what's happened to the rupee-dollar ratio. So I would say yes, it will add to the competitiveness of exports.
We are at a very interesting position where we live in a world which is full of uncertainties and continues to be so. And in a situation like that, to grow at 7.5–8% is, I think, very commendable. So there are a number of things that the government, that private sector has done right to bring us to this stage. But there's an equally important need to see that how can we keep this steady, not for the next 2 quarters, but for the next 5 years, 10 years. And that requires a lot more work to be done.
Okay, but do you see any slowdown in terms of consumption when it comes to urban or rural for that matter?
At this point of time, we've seen consumption to be reasonably stable. The GST rate cuts have only just happened. We saw an immediate bump up in October in consumption because of that. The festival season was also there. So we'll have to wait the next few quarters and see. But I would say this is the right time for us to see the next generation of reforms.
There's also news about Niti Aayog proposing an end of license Raj. How do you see that? Do you think that in a way will help Indian businesses?
Even in the last few years, we have seen this government move to decriminalizing a number of regulations, which is now helping business move ahead with more confidence. But as we do all this, we must keep in mind that with competing countries, we're just about at the starting line. And that's why a lot more needs to be done. We have enough experience of working as a liberalized society and economy for over 30 years now. And this is a welcome step by the Niti Aayog. I do hope it is taken seriously because this will just provide a lot more tailwinds for investment, for growth going forward.
I also wanted to ask you about NBFCs and the scrutiny in that area. Is the cost of funding becoming a challenge? Is that a challenge in any sense?
Firstly, we must recognize in the last 15 years that NBFCs play a very significant role in the economy. Over a third of credit now is NBFC credit. And it's not just in geographies or in areas that banks can't reach. The large NBFCs today, many of them, including ours, bigger than most banks in the country. RBI has correctly, in the last decade, increased their scrutiny, supervision, inspection over these NBFCs because they are important now to the economy, and hence we have to make sure that their stability is first and foremost kept in mind. We have seen credit flow to NBFCs reduce in the last couple of years because there were certain segments, especially dealing with small value unsecured loans, where we had seen higher loss ratios, and that needed to be controlled as a sector. I believe we are past that now, and this is a good time to focus as the economy grows for additional credit through the NBFCs going to consumers and businesses.
Rupee has slumped to like a historical low at 90 today, $90. What do you think about all of this in terms of India's export competitiveness?
If we take a step back and see over the last 15 years or so, Rupee has been depreciating about 3-4% a year. It doesn't necessarily happen in a linear manner because it can't, but it has been in that direction. And as we see from RBI's intent, it is not necessarily to peg the rupee at a particular level, but it is just to reduce the volatility. And I believe that is the correct path to follow as well. As an economy, given that we have this huge chance for all the reasons that we have seen in the last few years to become another significant manufacturing and services supply base to the world, naturally a weaker rupee is better than a stronger rupee. But as long as that slide is a stable slide, I think that is what is important.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.